my name is Martin. I'm the editor of Review.com and also Wwealth.my website. Today in our educational video series, I will be talking about what is dividend yield. Continuing from our past video series, this is an ongoing educational for our subscriber and listener of our website. Now you may know what is dividend yield all about. You hear this a lot, especially in our book that we talk about, Dividend Online, which happened to be the bestseller book available in MPH and popular bookstores. As a matter of fact, Bill, who just came and met me and told me the good news is, if you have bought the shares that is in that book, which is available in the bookstore, you will have made up to last week, a 42% return on some of the best quality dividend stocks, as well as having very quality growth with it. Now, isn't that great? And I think that's good what we are doing for our service in community for our listener and also for our investor in the Malaysian stock market background. Now, let's going back to what is dividend yield. I'm sure you have heard this a lot about dividend yield stock. So what is it? Okay, let me just help you write it. Now, when you buy shares, okay, when you buy shares or you buy equities, okay, what are we looking for are two things. We are looking for value, okay, and we are looking also for growth. But what's very important between the shares and equity of the stocks is also value and growth. Okay, value and growth. And what we want to have in here is another criteria that has dividend growth. So dividend growth, meaning we want to see a company that is increasing its earning, as well as increasing its dividend policy payment over a long period. Now, a lot of companies recently been listed in the IPO. They have been giving they've been giving dividend to its shareholders, rewarding since the IPO listing. Now, to me, that may sounds like a bribe, or it can be what we call Bill Wwealth.my, one of his article called a dividend trap. Now, Bill written a very good article on the dividend trap. Now, if you like that article, just send me an email. The email will appear at the end of this video. Okay, so we were talking about the companies that is actually paying a very high dividend yield, but I will talk about what kind of dividend yield it is. So as it is, when we buy, we want to be looking for dividend growth. Okay. So the next thing we want to look at is how do we calculate dividend. Now, in a lot of cases, if there is a dividend payout, they will always pay by dividend per shares. Okay, let's say the dividend per shares is 40 cents, okay, and the stock price currently is 6 ringgit. So how much is the dividend yield? So the dividend yield, okay, we call that, is 0.4 divided by 6 times 100%. That gives you a 6.67 dividend yield. Okay, now this is just looking purely from the dividend yield. We have not even put in the price appreciation to the stocks. Now, 6.67, you may say, it's a bit low. Now, think of it. If you put in a high quality stocks, compare what you are getting on your fixed deposit or your interest rate. Now, at the time of recording this, the interest rate that we have in Malaysia for the fixed deposit is only around, 3 to 3.5%. Now, imagine having a 6.67% yield. Isn't that great? Now, that's the reason why in our book, the Dividend Online, we are able to select stocks that is doing so well, not on top of the 6% yield that is getting, it is also gaining another 12% in terms of price appreciation. So that's the good side of it. Now, on another separate topic about dividend also, we do see a lot of people are comparing, if I have to buy dividend, why don't I invest in REITs? Okay, R-I-I-T. Okay, now remember, REIT stands for Real Estate Investment Trust. Okay, investment trust. Now, it is just like buying a real estate, but having said that, you don't own the property, you own some shares in the company. Now remember, in Malaysia market, in this case Bursa Malaysia, most of the REITs are paying somewhere between 5 to 7%, okay, dividend yield, okay, which is to me quite reasonable, and also it is only taxed at 10% compared to the regular dividend tax, which is taxed at the 28%. Now, if you are a low income earner or a retiree, you may want to take a look at the normal dividend payment, because you will be receiving a 28% dividend cut, but however, you can always claim it back in your income tax. That's with regards to the taxation. Okay, so if you look at it, this is only a 5 to 7% dividend yield with regards to the Malaysian rates. However, the price appreciation may also be a problem, because you don't get a lot of appreciation like what we talk about in our book Dividend Don't Lie. Okay, so we did talk about, now finally, okay, what is the right rates for dividend? Now the way I always look at it, you always have to compare to the fixed deposit. If you're getting a 3% or 3 or 4% from your fixed deposit, and you're getting a really reasonable between 4 to 6% dividend yield, that's, to me, that's a very good. You're getting a 6% yield. Now remember, we talked about earlier about the dividend trap, and about a lot of these new companies that's fully listed, they are giving very high yields. As a matter of fact, they are giving somewhere between more than 8 to up to 40% dividend yield. To me, like it or not, if they do pay a lot of dividend yield, ask yourself that question: where else can they, take the earnings to grow? Which means they are not growing, so they're just paying off. So do be careful about this dividend trap, that when they pay very high yield. Now that excludes the special one-time payment, which generally a lot of big companies like DG, I believe JTI do pay out a big dividend, but those are once in a while. But just be careful when you get dividend yield that is paying up between 8 to 40% or even higher. That to me may represent a problem. Okay. Now, as a summary, investing in dividend yield stock, it's a very good thing, and I encourage all investors to look at, because you win 2 out of 3 times. What do I mean? You win 2 out of 3 times. Now, if the market goes up, your stock goes up and you get dividend, that's a 1 win. Now, if the market doesn't go anywhere, stay sideways, your dividend still pays you. So that's another win. And finally, if the market goes down, at least you still get some dividend. So that's one of the benefits of actually investing in a dividend yield stock. So with that, let's conclude my education video series for what is dividend yield. Thank you for listening.